I think in France, for example, value investing is more recent than in the US. The company I was working with in the past, Tocqueville Finance, have been very successful pushing value investing, but it just started from the 2000 period. Then those companies like also Financière de l'Échiquier, like Amiral, have been very successful, and that lead to my point of view, too much democratization of the value investing. So many people were saying that they were doing value, whereas they were not really much value oriented. Even the big group, the big banks, they decide to launch value fund, but those funds was just driven on quantitative approach. Value in Europe now, especially in France, is too often perceived, to my point of view, as with a quantitative approach. Whereas in the US, it's much more complex, it's much more rich. So you have a kind of more quantitative approach with Graham, whereas with Buffett, you've got something that is much more fundamental driven. So I think you can be a value investor buying sometimes more expensive stock. One of the stock I bought in the past was Swatch. And that's true that for value investor just focusing on quantitative approach, it's very tough to invest into Swatch because it's so great companies, you will never get it for free in a sense. But if you're just patient, that will be the subject of our discussion. There is very few opportunities to invest, but if you pick the right opportunities, you can provide good earnings for your client, and that makes me interested in that kind of approach, which is more pragmatic.